how to legally write off expenses with no receipts. Hello, you got Mr. Smith, point 0.5 of Mr. and Mrs. Smith. And in this video, I want to give you an overview of how you can go about legally, keyword legally, writing off business expenses with no receipt. This might be right up the alley of so many business owners, because a lot of people who are business owners, especially small home-based business owners, they do not care for the receipt aspect, and this may help you to a degree. Now, it may not be what you're thinking, so I'm gonna go ahead and throw that out there. You may have an assumption of what this may be pertaining to, but this was brand new for me, and I think it may be brand new for many of you. For some, you may be experts already, but for me, it was brand new, so I felt the urge, the necessity to share this with you. So let's dive in and let's talk about just some of the basics before we get started and why I want to talk about this video. Well, it's tax season. Well, I know you're probably thinking it's not tax season, especially if you're watching this around the time of this recording. It is currently July 18th in 2019. And of course, it's not tax season, but every day is tax season when you're a business owner, because every day is an opportunity to accumulate tax deductions, because every day you should be doing something to move your business forward, something to pursue, make a profit. So every day is tax season. So it's never a bad time to talk about minimizing your taxes legally, because it's always tax season. Number two, most aren't prepared. A lot of people are not prepared for an audit if it were to come. And don't shy away from the word audit. Audit is just an opportunity to prove that you have business deductions. They want to see the things that you're doing for the expenses that you claim. So it's not a bad thing. They just want you to show what you're doing. And all you got to do is be good at being prepared. And this video will help you. And now you're in a position to where you can pass an audit. Most aren't prepared. Most either push their receipts off to the end of the year or the beginning of the year, or, whatever the case may be. But come up with a system or strategy to make sure that you're prepared, even if it's quarterly, monthly, whatever works for you, make it work for you. And the question is, do you have business deductions? It's 2 bullet points right there. It should only be one. Do you have business deductions? Because a lot of people think they got business deductions, but they really don't. They're claiming and saving all of these receipts, and we hear it all the time with our local business partners and just business partners in general. Yep, I got all of these receipts, but are they business deductions? Well, let's talk about it. Let's talk about the basics before we get to how to legally write off expenses with no receipts. So I'm gonna give you some basics, and it'll all tie in together to how to make that happen towards the end. So if ever during this presentation you feel like I thought it was about writing off getting expenses or business deductions with no receipts, it is. But I got to lay the groundwork, and I got to run through this really quick because I don't want this video to be too lengthy, and I don't have a lot of time, but I have to get this out right now. So let's talk about the basics. Now, this came directly from the IRS website. You'll see different clips of things that came directly from their websites, publications. It's so much stuff in there. I had to just kind of crop certain things so I can just do a brief overview and just kind of educate and read directly from their site. So that way you're not figuring out, what is this based on? Is this based on my business? Is this based on my home-based business? No, this is based on IRS, which all home-based businesses are based on when it comes to the tax law. So we're going directly to the source, no other location. And then once you understand this, you get with your tax professional, and they need to understand home-based business deductions, and hopefully they can make sure that you maximize your deductions. Now, without further ado, the introduction. This is just an introduction in the business deduction or the business expenses section of the IRS publication. And it says, this chapter covers the general rules for deducting business expenses. Business expenses are the costs of carrying on a trade or business, and they are usually deductible if the business is operated to make a profit. So, when I say it, a lot of people think they have business deductions, but they may not. The reason why I say that is this. If you're operating your business and you're just saying you have a business just to say you have a business so you can get some deductions, you must. This is not hearsay, or maybe it can work this way. You must be in pursuit of making a profit. So that's just in the introduction, just letting you know right off the bat that is usually deductible if the business is operated to make a profit. What can I deduct? To be deductible, a business expense must be both ordinary and necessary. An ordinary expense is one that is common and accepted in your industry. A necessary expense is one that is helpful and appropriate for your trade or business. So, depending on what you're in, you may be in a networking business, a home-based business. A lot of home-based businesses are network marketing businesses. You may be in a networking business, something that's common, or you may do consultations. Something that's common in being in a networking business typically is travel. That's an ordinary expense because you're networking, you're meeting people, you're going to different places. And I bring that full circle later, but that's something that's pretty common. And going to events, that's pretty common and ordinary in that space. A necessary expense is one that is helpful and appropriate for your trade or business. So that may be you having a cell phone and using your cell phone to do business. And in this day and age, I don't see any business operating without the use of a cell phone, at least a strong percentage of it, in order to carry out their business. And it's a necessary expense because it's helpful and appropriate for your trade or business. Once again, make sure you get with your tax professional so they can help you really maximize in these areas. I just want to give you the simplistic basics that came directly from their site. Let's proceed. So let's talk about personal versus business expenses, because there's a fine line sometimes people feel as it relates to, can I write this off? Can I write this off? Well, let's read. Generally, you cannot deduct personal living or family expenses. However, and I want to put a little emphasis on however, because when they say however, that's usually the IRS saying there's some room, there's a loophole, there's some type of leeway in certain areas. So you should get excited when you see that word, because they say generally you cannot deduct something. When they say you can't do something, that should be a letdown, like, oh man. But when they say however, you should get at the edge of your seats and figure out how you can maximize in this area. So it says, however, if you have an expense for something that is used partly for business and partly for personal purposes, divide the total cost between the business and personal parts. You can deduct the business part. For example, if you borrow money and use 70% of it for business and the other 30% for family vacation, you generally can deduct 70% of the interest as a business expense. The remaining 30% is personal interest and generally is not deductible. The same is applicable for your phone. You may use your phone, and it's a good chance that you use your phone for some personal, but let's say you use it 80% for business, 20% for personal. Guess what? That same device that would have been used for personal just became majority business because you're using your phone, your mobile device, to operate business in the pursuit of making a profit. Why is that powerful? Because most people are going to have a cell phone anyway. Most people are going to pay their bill anyway. Why not make a majority of it profitable? And there's so many things we do with our cell phones. It's more than just talking and marketing our business or sending text messages or communicating with business partners, colleagues, and employees if you have some. The device is now used for multiple things. I am currently recording this slideshow using my mobile device, my cell phone. So it's a whole production company built into a cell phone. So I use this phone for business strongly, like 100%, just about. It's like 99% of the time this phone is getting used for business. And you can do the same. And it may be certain things that would be personal, but guess what? You're able to take a percentage based on what is business related, and then the rest you just don't write it off. So just be honest in this process. Getting business deductions is all about being honest. You don't have to try to overdo it. It's enough deductions and things out there that as long as you're in pursuit of making a profit, then you're in good shape. So let's talk about it. Pop quiz. And I gave you some, so hopefully you paid attention. What are the 3 qualifications to legally take deductions? And if you're watching this video, no matter how you're watching this video, I want you to answer in the comments. I'm going to give you about 10 seconds to answer. What are the 3 qualifications to legally take deductions? Notice I keep saying legally because we want to be within the guidelines to make sure that it's no guesswork. We want you to be doing things appropriately so you can maximize, and it's enough legal ways to do things in order to make sure you're benefiting. So what are the 3 qualifications to legally take deductions? All right, I think I gave you enough time to put in some comments, and let's see. Number 1, it must have a profit intent. I think I said that like 12 times on the previous slides. It must have a profit intent. What does that mean? You must be on a mission to make money. Cha-ching! It's okay to be in pursuit of making money. That's what makes your business tax deductible. So if you're not in pursuit of making money, yeah, you want to solve a problem for somebody and help them. But if you're not in pursuit of making money, then you run a risk of not getting tax deductions. You run a risk of not having a true business. You run a risk of missing out on money that could be saved and brought back into your household that can be used to build wealth, used to reinvest. So you must be in the pursuit of making a profit and be on a mission to make money on a day-to-day consistent basis. And that brings me directly to number 2. Be consistently consistent. I love words and I just love how that flows. So when I was learning this and I saw that, I was like, that's a keeper. I like that. Be consistently consistent. So being consistent is one thing, but being consistently consistent is a whole nother thing. But the key thing is, and the cool thing is, it doesn't even require that much. We talking 3 to 5 hours per week allows you to qualify for business deductions. So that's number 2 of the 3 things that put you in a position to legally get deductions. 3 to 5 hours per week. Hopefully, if you really want to make money in your business, you're doing that in a day minimum. So it should end up being more than that. But I don't want them to change the laws. I like the idea of 3 to 5 hours per week, but just want you to know that you can start qualifying for what you do as long as you're in pursuit of making a profit, doing it consistently 3 to 5 hours per week. And last but definitely not least, keeping proper records. And I know this video was all about you doing it without receipts, but records must be kept. We're not saying you don't have to keep records. We're just saying it's a way to do it without receipts as it pertains to a certain thing. Because this is what you got to understand about record keeping. In the eyes of the law, in the eyes of the IRS, if it's not documented, it didn't happen. If it's not documented, it didn't happen. That's how they look at things. They say documentation beats conversation, no matter how you look at it. So if it's not documented, it's almost like it didn't even happen. And that's unfair, but you can leverage it and use it to your benefit if you understand that just keeping good records goes a long way. Let's proceed. All right. What's your favorite destination? What's a favorite spot you love to travel to or have traveled to or would like to travel to? Put it in the comments or whatever and say, hey, I love to go here. I love going to this spot. I love going here. And I'm going to let you know why this is important, because we're going to talk a lot about travel. We're going to talk about, travel expenses, because that's what I want you to get in the mindset of knowing how to write those off without a receipt. So let's talk about travel. And I just put some pictures of some previous trips, my wife and I and family took. I think this one where I got my arms spread out, I'm in Gatlinburg, Tennessee. We had a blast there. Got the Smoky Mountains out there. A ton of stuff to do for family and kids. If you haven't been, put it on your list. Got my wife and I, we're on the water. I'm not sure where we were then. I think that might have been Cabo. Yeah, I think that might have been Mexico, Cabo, St. Lucas, Mexico. My wife up there in the pink, I know that was Cabo. We got the mask on. I think that was Mexico as well. Sitting in the chair, I believe that was St. Petersburg, if I'm not mistaken. The other one where she's looking at me, I believe we're in Biloxi on that one, if I'm not mistaken. Then I got my people with me on the bottom left, or the bottom middle. Got my wife and my 2 fellas. We were in Texas on that one. And then my people with me on the bottom left, got my fam, my mom, my sis, my bro, my sister-in-law, who I just call her sister straight up, dropped the in-law, my niece, my nephew, and the fellas in the stroller. We were in Los Angeles. And these things are travel. When we travel different places and we making sure we're doing business, and it's key for you to understand that travel can be business deductions if you make sure you set up something business related prior to going and you keep the proper records because you're in pursuit of making a profit. So what are some of your favorite destinations? I just wanted to throw this cool collage of photos just to kind of get your juices flowing of places you can travel, places you have traveled, and the information that I'm sharing is applicable even if it's previous places you've traveled and you might not have kept proper records, because a lot of times you can go back 3 years as it relates to your deductions, as long as there hasn't been an audit already in place, but we won't dive too deep on that. I just want to keep this real shallow, but really educate you on at the same time. So think about your favorite destination. Now let's talk about travel, because this is what this really is all about. It's all about the travel deductions and how to make those tax deductible without receipts. And this is powerful. Do not take this lightly. And I'm gonna read this. And as you can see, these are clips. Why? Because this came directly from the publication. This didn't come from my mind. I didn't make this up. Now, of course, you still want to get with your tax pro, your tax professional, to make sure they bring it to life full circle, because sometimes the language that the IRS use can confuse you. It could be so broad, or it could be so narrow. It could be, it's just, you may not know exactly what they're talking about. It could be a little bit questionable, and words mean different things sometimes. So you want to get with the professionals. However, this came directly from the site, and I'm going to read it verbatim. Not that you can't read, just want to read it verbatim and elaborate on certain things. So number one, travel. If you temporarily travel away from your tax home, keep that word in mind, tax home, because we're going to talk about that. If you temporarily travel away from your tax home, you can use this chapter to determine if you have deductible travel expenses. This chapter discusses traveling away from home, temporary assignment or job, what travel expenses are deductible. Now, I ain't grabbed everything from this, but I do want to discuss a few things. It also discusses standard meal allowances, rules for travel inside and outside of the U.S., luxury water travel, deductible convention expenses. Now, let's dive into this. Travel expense defined. For tax purposes, travel expenses are the ordinary and necessary. There are those two words again. Ordinary and necessary expenses of traveling away from home for your business, profession, or job. An ordinary expense is one that is common and accepted in your trade or business. A necessary expense is one that is helpful and appropriate for your business. An expense doesn't have to be required to be considered necessary. So that's a repeat of what we already went through. Now let's talk about traveling away from home. You are traveling away from home because you're not always traveling away from home, even if you think you're traveling away from home. Sometimes you may just be making a quick turnaround and it might not qualify. So you are traveling away from home if your duties require you to be away from the general area of your tax home. There's that word again, or that combination of words again. Defined later, substantially longer than an ordinary day's work. Now, an ordinary day's work is typically defined, it's just because I didn't catch this in here, I don't believe, typically defined by about 8 hours, give or take about 8 hours. So if you're away from your tax home for about 8 hours, even if you don't spend the night somewhere, but it requires you to get some type of rest, then that's considered traveling away from home. So you may go somewhere early one morning, but you have to get a little rest because you were there 8 hours, and then you pick up and, even though you didn't stay there over past midnight, you came on back home, but you needed a little bit of rest in order to make that trip back home. Then guess what? That does count as traveling away from home. Another way that it is put is if you go somewhere and you have to sleep in a foreign bed being a bed other than your own, then it's a good chance you might be traveling away from home. Number 2, it says you need to sleep or rest to meet the demands of your work while away from home. So that's being away for a substantial amount of time because you have to sleep or rest in order to meet the demands of traveling back home. The rest requirement isn't satisfied by merely napping in your car. So keep that in mind, because I know somebody might think, well, I can just take a nap in my car and that counts. No. You don't have to be away from your tax home for a whole day or from dusk to dawn, as long as your relief from duty is long enough to get necessary sleep or rest. So that's that 8-hour window that I was talking about. So understand that you have to be away from your location for a certain amount of time in order for it to count as travel. However, if you made a quick turnaround, like for us, a quick turnaround trip could be, we've done this for business. We've gone to Memphis, made a quick turnaround and came on back because it's 2 hours away. We didn't have to get a rest period. We still got the travel, or we still got the expense of mileage, but we didn't get the lodging or the meals associated with travel due to the fact that we didn't have to sleep in a foreign bed, due to the fact that we wasn't gone a substantial amount of time based on an ordinary day's work. So whatever that is for you, make sure you understand it and know the difference, because it plays a part in what counts as travel and what doesn't. Not based on hearsay, guesswork, based on the laws of the IRS. That's that. Now, tax home, because I told you to remember that. I told you to keep that in mind so you can think about what a tax home is. And then I'm going to give you one example just so you can ponder on it. There are several different examples. This is not the training to get you too in depth. It's just to let you know what's out there and what exists and how you can go about making sure you understand your tax home, the whole nine. Anyway, tax home. To determine whether you are traveling away from home, you must first determine, and I apologize for all of the pop-ups. Got a lot of action going on in this business because this phone is used for a ton of things, but I have to get this training out. So let's repeat. To determine whether you are traveling away from home, you must first determine the location of your tax home. Generally, your tax home is your regular place of business or post of duty, regardless of where you maintain your family home. It includes the entire city or general area in which your business or work is located. Now, generally, your tax home is your regular place of business or post of duty. And then with them saying, regardless of where you maintain your family home, this means that if your normal place of doing business is at another address than where your family resides, then that may very well be your tax home. Keep that in mind. And it includes the entire city or general area in which your business or work is located. So if you're out of town and even though you have a home elsewhere, your tax home may very well be the location that you're at the most due to a couple of particulars. And we'll dive in a little more. If you have more than one regular place of business, your tax home is the main place of business. And it's a tab that you can click on that dives into that. If you don't have a regular main place of business because of the nature of your work, then your tax home may be the place where you regularly live. This is where most people fall into the category of with a home-based business, if it's network marketing or, consulting or whatever it is that you do. Most people, their regular residence is their tax home because they don't necessarily have an office or they're not relocated somewhere else. So they will use their regular home as their tax home, which is good. And you'll understand why you want to have a tax home and why you don't want to be in the middle of saying, I work from anywhere. I'm going to show you how that you don't want to say that. You want to have a tax home as it relates to tax deductions pertaining to travel expenses. If you don't have a regular or main place of business or post of duty, and there is no place where you regularly live, you are considered an itinerant. Basically, what that means is you're considered to be like a nomad, a wanderer, just kind of traveling along willy-nilly. So if you're considered to be an itinerant and your tax home is wherever you work, as an itinerant, you can't claim a travel expense deduction because you are never considered to be traveling away from home. That's going to help somebody. I'm going to read that again. If you don't have a regular or main place of business or post of duty and there is no place where you regularly live, you are considered an itinerant and your tax home is wherever you work. As an itinerant, you can't claim a travel expense deduction because you are never considered to be traveling away from home. So I want y'all to think on that and marinate on that. If you don't have a tax home and you say that you live the nomad lifestyle or wherever you are at, that's where your office is, and you don't have a main tax home, then you miss out on any travel expense that you think you can claim. So what's wise is making sure that you have a tax home and you just so happen to work in other areas. And I dive in a little bit more, but I had to put a little emphasis on that because so many people have to be mindful of the words that they're using or the advertising that they do, because what they do is destroy some of the tax deductions that they can get as it relates to travel. Now, and we'll pick back up on that later. I want to dive into a couple of other notes and an example. Then we'll pick back up on being an itinerant. All right, main place of business or work. If you have more than one place of work, consider the following when determining which one is your main place of business or work. Consider these things: the total time you ordinarily spend in each place. Number 2, the level of your business activity in each place. And number 3, whether your income from each place is significant or insignificant. So here's an example. You live in Cincinnati, where you have a seasonal job for 8 months each year, and you earn $40,000. So it's kind of seasonal, but you're making $40,000. Not too shabby in 8 months. You work the other 4 months in Miami, and also it's a seasonal job, and you earn $15,000. Cincinnati is your main place of work because you spend the most time there and you earn most of your income there. So pretty much it lets you know that you spent the majority of your time there and you made the most significant amount of money in Cincinnati. Regardless of if your main home was in Miami, it's a matter of where you spent the most time and made the most significant amount of your income. So take a cold hard look at your scenario. Many people don't even have to question this, but some will. So make sure you understand your scenario. And there are a ton of different scenarios, but just understand that these type of things matter. Your tax home matters, and the way you go about keeping your records, it will make a big difference if you understand this. And get with a tax professional. As I said from the beginning, get with a tax professional so they can let you know, okay, this is your scenario. But nonetheless, keep up with your records, because once you get to the tax pro, you can say, hey, I've been keeping these records. You know, I'm not sure if this is considered travel or not, and they'll be able to break it down as long as you're keeping good records. Now, let's talk about the itinerant. Let's talk about a person who lives a nomad life, the wanderer, the person who doesn't have a tax office, because a tax home, because they say wherever they are is where they work. That's the person who will not get the claim travel expenses, which is a big deal, because with the travel expenses, you get to claim a lot of things such as airfare, the lodging, the meals that's associated with it, but the list goes on. So mobile only, if you're mobile only, because a lot of people say I'm mobile only, I don't have a tax home, I don't have a physical location, I just pull up, I just pop up wherever you at, you know, I'm mobile only. Be careful, especially if you want to keep majority of your money, especially if you want to maximize your tax deductions, because you minimizing your taxes makes you more profitable. On paper, it might have looked like you made $80,000 that year from your business, but if you missed out on all of the travel expenses and you end up having to pay more in taxes than you would have, so your taxes cut you down to where it's really like you made $40,000, that's a lot of money to give away just by calling yourself mobile only. So what you want to do is you want to mandatory figure out a way to have some form of a tax home and an address, even if that means getting a PO box and that is considered to be your tax home area. Now, I'm gonna preface this. It's preferred, if you don't have your own residence or your own office space with an address, it's preferred that if you're a tax home or if you have a PO box, to get a PO box that doesn't have the PO box attached to it, meaning that it looks like a regular address. Many post office, I ain't gonna say many, but some post offices offer that option to where when you get a PO box, the address itself looks like just a regular home. So nobody would know just off of the address alone that it's a PO box. So now that allows you to have a tax home based on the address alone. So with that being said, you got to understand the power in not claiming that you're mobile only, because thousands of dollars you're probably leaving on the table, and understanding that a tax home determines how much of your expenses can be deducted when it pertains to travel. And this goes hand in hand, because I know you're probably thinking, I thought we were talking about how to write off deductions without using receipts. This goes hand in hand with all of that. I just had to preface it with some groundwork, some foundation, some basics, so you can at least get the flow of travel expenses. Now, No tax home can kill your travel expenses. I pretty much said that. If you have no tax home, that can kill your travel expenses. So figure out a way to get a tax home. Now, I just said this as well. I'm getting ahead of myself. I thought this training was about no receipts. Because somebody probably thinking that. I thought this training was all about how to claim tax deduction without no receipts. It is. And no, I'm not talking bank statements. Because some people might think, you probably just talking about using your bank statements. I knew I could use my bank statements because the bank statements show all of the money that I spent, da 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 da. I'm not saying you can't use them. Sometimes the audit might let you, but it's risky due to the fact that when you look at the bank statement, nothing about it says what makes it a business expense. And I'm not going to get into showing how to keep the records and all of that, but as it relates to your records, the main thing the IRS wants to know is, who did you spend the money to? Where did the money go to? What made that expense a business expense? Where was it at? And, you can have some additional things. But once you understand that that's what the IRS is seeking, then you understand that just a business or just bank statements alone won't cut it. Because they want to know when it happened, the location, all of that. So bank statements alone won't get the job done. So that's not what I'm talking about here. Now, let me see what the next slide is. Okay, perfect. So I'm going to go dive into directly what I'm talking about. And we're going to wrap this training up. I just wanted to paint the picture. And this was brand new to me. And when I was exposed to this, I was like, that's pretty good. That's pretty good right there. And there's some ways that you can win in this just because you're doing it with no receipts. So no receipts doesn't necessarily mean you have to settle. So what I'm doing is I'm going to this site. You might be familiar with this, but I wasn't. And when I was exposed to it, I'm like, that makes a lot of sense for a lot of different reasons, pertaining to how businesses operate. So I'm at gsa.gov. And I'm in the area where they talk about a per diem. Per diem is basically per day rate. So I'm sure that diem is it means day in another language. So per diem. So 2019 per diem rates for Los Angeles. I already put in Los Angeles was the area. You can change it to whatever area you want it to be. It allows you to do that to see what the per diem rate is. But basically, this is how it works. When you're traveling, you have the option to use what's called the per diem rate. And this will keep you from having to use a receipt. So say you're out and you went somewhere and you stayed in a hotel and which is considered lodging, or you bought some meals, which is considered, meals. Well, I ain't gonna say meals and entertainment, but meals and incidentals and things of that nature. And you're out of town and you didn't keep up with the receipt, so you didn't want to keep up with the receipt, so whatever the case may be, you can use the per diem rates that are locked in for that city and state and get as close to wherever the area is that you're going to be in. You can use those per diem rates and you don't have to use the receipts. And this is the power in that. This is the power in the fact that you don't have to use those receipts. So the area I chose is Los Angeles area, this Orange, Santa Monica, all of that area. And it's based on the month, because different months have different price points. Now, I want you to see, this is the lodging by month. So for each month, and let's say you stayed there for a certain amount of days, for each day, say you went there, it's July. It's July right now at the recording of this video. Say you went to Cali in July and you were in this area. The per diem amount for you to claim on your records is $180. You can claim that per day. No receipts. That's the per diem amount. This is the beauty of it. This is the sweet spot. You may have got the hotel for less than $180 per night. So if you got the hotel for less than $180 a night, you win. That's a beautiful thing. Now, if you pay more than $180 a night, then you probably want to use the actual receipts. So keep that in mind. Some stuff you might want to use the actual receipt. Otherwise, you miss out on some of the dollars that you could have claimed. But if you pay less than that, you just came out on top. I'm going to tell you what's even better than that. If you just so happen stay with somebody that you can still claim this per diem rate. But when you keep those records, you don't want to put stay with my cousin, stay with my uncle, stay with, my mama and them side of the family. You don't want to do that. You want to put in where you were, the location, the city and state location, and then for the who, you want to put Johnson family or Johnson lodging, Smith family, Smith lodging, Smith household, something along those lines. Not something like it was my cousin, because you could have easily had to pay them, especially now with all of the Airbnbs that's going on, and VRBO, where people are actually renting out their location. It makes it a lot easier. So even if you stay with someone, you can claim this per diem rate, and you win if you are able to get whatever the lodging is for less than whatever the dollar amount is based on that month for that year. And it changes on a per year basis. Same for meals. And this is how they break the meals down. In Los Angeles, you get a total of the per diem rate of $66 per day. So let's say you didn't keep up with all the receipts, or you didn't want to. $66 per day goes to meals. Now, this is the breakdown of it, because it's just not, 66. And keep in mind, if you didn't have to pay for food because you ate somebody cooked you a home cooked meal, you just came out on top. If you pay less than this amount and you use this per diem rate, you just came out on top because you use the rate that they provide. So that being said, with this meal per diem, it's broken down. It's $66 total, but this is how it's broken down. Breakfast is $16. So the name of the game is, can you stay under these numbers as it relates to your per diem rate? Lunch, $17. Dinner, $28. Then they incorporate some incidental expenses, things of that nature, for an extra $5. And that brings the whopping total to $66. Now, I'm going to go over this briefly. It says first and last day of travel. I'm going to click on that just so you can see. First and last day of travel. This column lists the amount federal employees receive for the first and last calendar day of travel. The first and last calendar day of travel is calculated at 75%. So, say you stayed there 5 days. That first day and that fifth day, you would only be able to claim $49.50, not the full 66. Because basically how they're looking at it is, if you arrived on that first day, you didn't spend the whole day there. So they don't want you claiming the whole day worth of per diem expense. Same for the last day. If you leave on that last day, you didn't spend the whole day there. That's only fair. So a lot of times we think the IRS is the bad guy. They're not. It's just a matter of you understanding what you have access to. So on the first and last day, you'll take this discounted rate, but you understand why, because you wasn't there for the full day. So I hope you understand the power in this per diem and how this can benefit you on a traveling tip, and you will be able to keep records when you're traveling. This ain't for around the house. This is dealing strictly with travel and keeping those records with no receipts. And that's powerful, especially if you incorporate travel, which I personally feel like you should. Make sure you're doing some travels as it relates to your business, because that's how you expand. That's how you grow. You may go to an event. It may be a networking event, or it may be a continued education event, or it may be a business expansion event, because that's what we did when we went to LA. And that's why I chose LA. We just recently came from Cali, about a month or so ago, and we were there doing business expansion. We did a credit workshop. So if we left any receipts off the table, you better believe I'm using these per diem rates, because I think we may have left some. Now, it's a lot of them we got digitally that we're able to use. But if I look at it and it happens to be less than the per diem rate, you better believe that's the rate that we're going to choose. The per diem rate. See, it's all about strategy, not getting over anything like that. It's all about strategy in order to maximize your tax deduction, and that's how the wealthy stay wealthy. So let's get back to the slides, and we'll wrap this thing on up, because I just wanted you to see the power in this. And you can change out all of the location. I just put in LA. It's really simple. You can filter the results, narrow it down. But this is just an example of the travel and meals. Of course, get with your tax professional, because I know the tax professional, they'll be able to, hopefully they understand this. Most of the time, if it's not a tax professional, it might have to be a strategist, somebody who really dives deep into these type of things, and that's how I actually learned. I was tuned into a tax strategist, and I was like, this is some good stuff. You know, she's studying her craft and really honing in on continued education. So when she broke this down, I know a lot of people would benefit, and a lot of people would want to let her do their taxes due to the fact that she's getting down to the nitty gritty. So get with your tax pro so they can break this down and give you a thorough understanding of how to make this work for you. And that way you don't have to always worry about the receipts. And if I find out some additional information on how you can do that with just local things, then by all means, you know, I share. But let's dive right back into the slides and then we'll wrap it up. So like I said, this is not about the bank statements. This is about using that per diem, which is a government site that allows you to get the rates based on the location on a per day basis. Now, this is an opportunity for you to reconstruct your records. Because if you had some times where you traveled and you didn't get all of your input, or you didn't get all of your expenses, now you can use the per diem rate to go back and reconstruct. And you can do it, go back as far as 3 years, as long as you haven't been audited. Because if you've been audited and now you're going in there reconstructing, then it's considered to be tampering with the evidence. You know, that's how they look at it. But now updating it is one thing if you already had the record somewhere. But I'm saying just messing with the records, you want to reconstruct before audit ever happens. And this is what the IRS wants to know. They want to know when, they want to know where, they want to know who, they want to know what makes this a business expense. Like I said, you got to be in pursuit of making a profit. If you're not in pursuit of making a profit, you don't even qualify for business deduction. So no matter what business you're in, make sure every day you're consistently being consistent and you're in pursuit of that profit and you're keeping those records. I hope this was helpful to someone. Share this one with someone who you feel may benefit. This is a training I also share with my team because I knew this was something that I knew they could benefit from. So I'm like, I got to share this with my network, my colleagues, my team of people. But I also knew other people would benefit from it as well. So as I stated, how you can legally write off expenses with no receipts. Now you know how, and it's pertaining to travel. I know that might have been a little bit of clickbait, but it's pertaining to travel. But at least you're able to do it, and you have a newfound knowledge on the per diem site, and that was the gsa.gov. You can type in gsa.gov, do / per diem, which is PERDIEM, and it'll take you there, and you might have to navigate and play with some things. But now you know something that you did not know, and if you already knew, why you didn't tell me? Why you didn't share it with me? But that's all I got. Mr. Smith, 0.5 of Mr. and Mrs. Smith, signing out. Salute.